Hey everybody, it's Bobby Nahum here with AMAC Real Estate Company. Hope everybody's having a fantastic week so far. We are here today to talk about the real estate market here in Leon County. We're going to talk about residential real estate a little bit and go over what we saw here in our local real estate market in the third quarter of this year. We're going to discuss some real estate related metrics. We're going to talk about how the market did in the third quarter of this year compared to the third quarter of 2024. And I'm going to talk a little bit about what's going on in the real estate market, give you guys an idea of what you can expect to happen in the real estate market in the next few months, and then give you some tips on what you should do if you are looking to buy or sell a property in today's real estate market. So let's go ahead and get started. So basically, just to start off, give you guys kind of a summary of what we saw. So overall, in the third quarter here in Leon County, we saw an overall uptick in activity, both with listings, the number of properties listed for sale, and also with the number of properties sold. So both of those went up. The only caveat to that is that the number of properties listed for sale went up by almost twice as much as the number of properties that sold. So even though both supply and demand did go up, the supply shifted about twice as much as the demand upwards. So that means we basically shifted a little bit more to a buyer's market in the third quarter of this year compared to a year ago. Prices basically fell flat in the third quarter. Home prices compared to the year prior, there was really almost no movement in home prices in the last year, up or down. It was just kind of flat. And then it's taking longer for homes to sell. It took longer for homes to sell in the third quarter of this year compared to a year ago. And then also homes are selling for about, in terms of compared to what the homes are listed for, they're selling for about the same amount compared to what they're listed for. That's called the sale price to list price ratio. So that was pretty much unchanged from a year ago. So let's get into talking about the number of listings. So the number of properties listed for sale. So really, going back probably until the end of 2023, we had been seeing a consistent decline in the number of listings for probably since back in 2017. And then at the end of 2023, the number of properties listed for sale finally started to tick up, and that continued in the third quarter of this year. And we saw the number of properties on the market increase by 11% compared to the third quarter of 2024, a year prior. So we're at the highest number of properties listed for sale currently in Tallahassee since 2021. So a little bit over 4 years. We're at a little bit over a 4-year high in terms of number of properties for sale. So and essentially that increase in the number of properties listed is kind of creating this softer market that we're experiencing right now, where homes are selling for a little bit less, even in some cases. They're taking longer to sell, and that's just because buyers have a lot more homes to choose from. Buyers are taking their time more so, and buyers have a little bit more negotiating power because homeowners are finding that they've got more homes to compete with to get their home sold. So property sales. So property sales did go up in the third quarter of this year in Leon County. They went up by 6% compared to the year prior. So that is actually kind of a reversal of what we have been seeing over the past couple of years. So since the end of 2022, when they started really increasing the mortgage rates, that's when sales started going down, and we've been at a consistent downward direction in property sales in Leon County since the end of 2022. I believe this is the first quarter that we've had a year-over-year increase in property sales in a while. So we saw a 6% increase in the number of homes sold, so that's definitely a good thing. However, like I said before, the number of sales is not keeping pace with the increase in the number of properties on the market for sale. So even though property sales went up, or even in a softer market in terms of it being more of a buyer's market than we were a year ago. Property sales, property prices, average home prices were flat for the most part in the third quarter of this year. We saw a 0.3% increase in the third quarter in average home prices compared to a year prior. So Just to give you the exact numbers, so in the third quarter of this year, the average home price in Leon County was $354,847. That's compared to a year prior in the third quarter when it was $353,781. So the average home price went up by $1,000 basically in the third quarter. So basically flat. That's not surprising at all, given the fact that we have more homes to choose from. The increase in, it's just basic supply and demand. So increase in supply, and then we still have relatively low demand. The prices are basically flat. And honestly, I wouldn't be surprised if going into the final part of this year, if we start to see a little bit of a dip in home prices compared to a year ago. It wouldn't surprise me, just because of the fact we have so many more homes on the market to choose from. In terms of days on the market, we have we saw an increase in average days on the market as well. So it took 57 days for a home to sell in the third quarter of this year compared to 54 days. Compared to 54 days a year prior, back in 2024 in the third quarter. And then the average sale price to list price ratio, that basically measures what a home sells for compared to the asking price. That came in at 90, I believe it was 97.95%. That's right. So on average, the average home in Leon County in the third quarter sold for 97.95% of the asking price. That's up just 1/10% from one 100th% from a year ago when it was 97.94%. So basically, the sale price to list price ratio is flat. Distress sales went up a little bit, but they still are pretty much very low, not having any impact on our market. Distress sales made up 2.2% of all sales in Leon County in the third quarter, compared to 1.9% in the third quarter of 2024. So distress sales are usually foreclosures and short sales, but they can be other types of sales. It can be like bankruptcy sales, tax deed sales, things like that. Any type of sale where the nature of that sale leads to the property selling for under market value, that can be a distress sale. And again, distress sales are having almost no impact on our market currently. Going back, I want to talk about a couple points from these metrics that I think are important. So with listings, and I think I touched on this, so listings were at basically a 4-year high. I think it was early 2021 since we've had as many listings as we currently have on the market now. So, and just to kind of give you the exact numbers, so in the third quarter of this year, we had 2,678 properties on the market at any given time. That was the average number of properties we saw on the market in the third quarter. So, and again, that was basically the highest number since early 2021. Sales, so sales did go up, property sales did go up like we talked about, but even though they went up, they're still very low. So the last time we had 956 properties that sold in the third quarter. The last time it was that low was in the third quarter of 2013, so 12 years ago. So, and that's a pretty good indication that sales are really slow. If you want to kind of get an idea of where sales should be, like a healthy level of sales, go back to the pre-COVID era, 2017 to end of 2019. Really, 2018 and 2019 is really a good benchmark. And then obviously you had the frenzy of home sales in late 2020, 21, and 22. But we're still pretty well below where we were at in the pre-pandemic years. So we've got a ways to go. Even though property sales went up in the third quarter, we still have a ways to go. But at least we're headed in the right direction. So that's a good thing. So let's see. So what can we expect in the months ahead? So basically what I would say is that for the end of this year and probably even into the first quarter of next year, I think we're probably going to have more of the same, basically. I would expect home prices to continue to be kind of flat. Maybe they may even fall a little bit from a year ago. That wouldn't surprise me. Home sales are still going to be low, maybe up from a year ago a little bit, but they're still going to be very low. And I think we're going to continue to see more properties hit the market. More people are selling their houses now. It just seems to be the way things are going. So I would expect those trends to continue. It's still going to take longer to sell your house than it did a year ago, and I think we're not going to have much change in terms of the average sale price to list price ratio and all that. I think that's going to pretty much remain flat for the next 6 months probably. I do think though by the time we get to the second quarter, we're going to start to see some positive changes. So we have a couple things that are going to take place in the next few months. So the first thing is it seems like interest rates are likely to come down at least a little bit more in the next few months. So we're probably going to have at least one more drop in the federal funds rate. The Federal Reserve is probably going to do at least one more drop. If they do two more drops in the federal funds rate within the next few months, we could see the 30-year fixed rate mortgage drop below 6%. If that happens, that will, in my opinion, likely cause a pretty big uptick in sales, because once we get under 6%, that's going to be a big psychological trigger for home buyers to jump back into the market. So we have that going on, but the other thing we have going on is the tax changes that are going to go into effect on January 1. So earlier this year, back in July, the Big Beautiful Bill passed. So basically, there are some things in there, some tax breaks that are going to save most Americans money. The first one is going to be the increase in the state and local tax deductions, or aka SALT deductions. So that's basically state and local income. That's state income tax. That's local sales tax, things like that. So as it stands right now, current tax law, you can only deduct up to $10,000 for that, but that number is going to go up to $40,000. So if you do deduction instead of taking the standard deduction, if you itemize and you live, say, in a higher cost area in Florida or somewhere else in the country, that's definitely going to have an impact on you, because you're going to be able to deduct those property taxes. And then also, if you live in a state where you have state income taxes, you'll be able to deduct more of that from your federal income tax return. But here in Florida, we don't have state income tax, but we have local sales tax and I think we have some state sales tax too. You'll be able to deduct that from your federal income tax return as well. And now that it's a $40,000 limit as opposed to a $10,000, a lot of people will be able to deduct more, so that's going to directly put more money in people's pockets. So some other changes are the no tax on overtime pay, no tax on tips. Also, seniors have a new $6,000 tax deduction as well, and also the tax deduction on car loan interest. So before you could not deduct interest on car loans, now you will be able to. So that's going to affect a lot of people. So I think between the tax breaks and then the lower mortgage rates by, I'd say, March or April of next year, I think that we're going to start to see a pretty big impact on the real estate market. You'll see sales go up. I don't think prices are going to jump real big, but we probably will see somewhat of an uptick in home prices starting probably in the second quarter of next year. Let's see what else. So some things to pay attention to. Obviously, inflation, that's one thing you got to pay attention to, because inflation is driving the Federal Reserve's decision to lower the federal funds rate. If inflation stays at above, if it stays where it's at or goes higher, it's likely that the Federal Reserve will only probably do one more reduction in the federal funds rate. If inflation comes down a little bit, they'll likely do two. And I think if we do two more, that's where we'll see the mortgage rates really drop, and that will have an impact on the real estate market. So also the other thing is mortgage rates, like we talked about. If the mortgage rates come down, sales are going to go up. And then jobs numbers. So so the other thing besides inflation that affects the Federal Reserve's decision to reduce the federal funds rate is the job numbers. So if job numbers continue to be very weak or go down, then they're more likely to drop the federal funds rate. If job numbers start to go up a lot, then we could see the Federal Reserve decide to tamper back and not drop the rate, or maybe only drop the federal funds rate one more time. So, and then the other thing, wage growth, that's important. The higher wage growth we have, I think the better it's going to be for the real estate market, because what we need to happen ideally is we need to see wages continue to exceed inflation levels, and also to exceed home price increasing as well too. So, if home prices are going up by 1 or 2%, and people's wages are going up by 5 or 6% annually, that's a good thing, because that will help more people be able to afford homes. Between 2020 and 2024, home prices were just really exceeding wage growth, which is why we're in this affordability crisis right now that we're in. But if we see wage growth continue to exceed property value growth, then I think we'll see more and more buyers start to jump back into the market. So now, if you are selling a house in today's market, one thing you have to realize is that it's tougher to sell a home in today's market. Like I said before, you got more homes to compete with, a lot more homes to compete with, and demand is pretty weak right now. So you need to price your home right, and you need to price it right from the start. Don't start high with the hopes that you're going to be able to drop the price or negotiate down later. Because what will likely happen if you start too high is you just will not get any showings, and then your listing will get stale, and you'll get into that cycle where you have to chase the market down to try to get buyers, and you'll ultimately end up selling your house for a lot less than you would have had you just started out pricing it right. So pricing the home correctly is very important right now. Also, get your house in good condition before you go on the market. Remember, we're competing with more properties today than we were over the last few years. So it's very important that your property sticks out in a positive way so that you get the attention of home buyers over the other listings. So if you got repairs that need to be made, updates that need to be made, get those done before you go on the market. Also, you need to have great marketing in today's real estate market. The days of just sticking your house on the market and getting multiple offers automatically are well behind us. So you need to really have good photos. You need to have some good video. You need to have a social media presence. Also, be marketing to your fellow realtors if you have your house on the market, because something like 90% of transactions have both a listing agent and a buyer's agent. So you need to get the realtors seeing your house as well. So great marketing is very important. And if you have an agent listing your house, don't make sure that agent is not trying to not spend money on marketing, because in today's market you got to spend a little bit more to get people's attention. So if you're buying a house, one thing you need to realize is that you got more homes to choose from. Home buyers have more negotiating power. However, it's not 2008 and the market is not crashing. So homes that are priced right, homes that are in good shape, and especially homes that are priced right, in good shape, and are in high demand locations are still selling for a lot of money, even in today's market. So that's something that you have to realize. And if you come across one of those homes, don't try to lowball, because you're likely to lose out to somebody else, even in today's market. Also, I would say that if you're a home buyer, learn your market really well. Know what's a good deal, what's not a good deal. And that way you can know how to craft an offer. If you know a house is not a good deal, then you need to come in lower. But if the house is a good deal for your market, then you need to probably offer the people ask price or close to what they're asking for the house. So opportunities are out there for great deals in today's market. There's a lot of houses out there that are overpriced, that are just sitting, and a lot of homes that need work and or are overpriced and are just sitting. So a lot of those homes that have been on the market 60, 90, 120 days, 180 days because they're overpriced or they don't present well, that's an opportunity for home buyers to go in, make a low offer, and possibly get a great deal. I've had several clients of mine, buyer clients of mine, that we've done that. We've gone in and made a really low offer on a house and ended up getting it for a great price. So there is opportunity with that. So don't shy away from making a low offer if the house has been on the market for a long time and it hasn't been selling. So that's it, y'all. I hope you guys enjoyed this real estate market report. If you have any questions, just let me know. You can send me an email, you can send me a text, or you can leave a comment on this video. And if you like the content, as always, give me a like, and also please subscribe to my YouTube channel. Thanks, and I hope you guys have a great week.